What's up, guys? Brandon here, aka your favorite Minnesota Realtor, and today we're going to be talking about a big topic that a lot of people are wondering about, and that is the home buying process. Now, when I say the home buying process, I'm talking start to finish from the pre approval application all the way until closing on your first home. Now, the presentation that you guys are about to see is the actual presentation that I use when I teach my homebuyer classes. So you're going to be getting all the information that you could ever possibly ask for. And at the end, if you guys still have questions, you can download my simple home buying guide, which I'll have linked below during the video. So without further ado, welcome to the home buying class. Hello, everyone. This is your pilot speaking, and the time is right now 9:36 a.m. And we are going to be starting the homebuyer class here shortly. The weather outside is fairly cold, but it's pretty warm in here right now, about 69 degrees. The homebuyer class will take about 1 hour. So if you have any questions, feel free to leave those in the comment box below. But until then, why don't you guys just take a seat, sit back, and enjoy the class. All right, let's get started. Let me go ahead and share my screen. And boom. All right, take a sip of coffee first. Bright-eyed and bushy-tailed. All right, so here you see a couple pictures or a few pictures of some people that have taken this homebuyer class, and you see where they're at today. So I would like to think that I have some valuable information in here for you guys. How do I go next? There we go. All right, so just a couple of the class goals by you guys attending this home buying class. We will have you understand the benefits of homeownership, or some of the benefits of homeownership. You will understand the various steps in the home buying process, and then also understand some of the different financing available. Can't talk. Understand the different financing options available to you. So to start off, just a little bit about me for people that don't know watching this video. I've been an agent for almost 3 years now, to be 3 years in May of 2022. I was born and raised in Minnesota, so I've been here my whole life. Grew up specifically in the New Hope, Crystal area. Went to Cooper High School, class of '06. Specialized in working with buyers, sellers, and investors, although a majority of my business are first-time home buyers. And then the main part of my business is I focus on, educating people and giving out free information. So as you can see, these YouTube videos that I do, the homebuyer classes I teach, Facebook groups, all kinds of stuff like that. I believe that my value to you guys is giving you this information for free without asking for anything in return, just because there's not really many places out there that describe all of these things. So like this homebuyer class information that you guys are going to get. So pride myself on getting that information out to you guys. So talk about some of the benefits of buying a home. The first one is you build equity every month and profit when you sell. So basically every month that you're paying that mortgage down, your equity is essentially going up. Not only that, but which, we also have that at the end, appreciation. Historically, every single year, home values go up. So to give you guys a good example, I bought my first house it's a townhouse, in June of 2018. Now I bought that house for $189,000. 4 years later, or almost 4 years later, we are now in February of 2022. I could sell my house now for $230,000. So basically my home value has gone up about $40,000 in almost 4 years. And then another one that people don't know about, or a lot of people don't know about, is that you can actually deduct your mortgage payments and interest, or not your mortgage payments, but your mortgage interest on property taxes off on your tax returns. So this is the simple home buying guide. This basically shows all the steps of the home buying process in a very condensed format. And this is actually going to be available to you guys. I'll leave a download in the description of the video. so that you guys can download this for your review. But starts at number one over in the left-hand side, meet with a realtor, and then you can go down the line and kind of get a general overview of all of those different topics. And in this entire presentation, we will actually talk about each one of those in more depth. So starting with meet with a realtor, we'll talk about some of the values of having a realtor for a buyer. So the first one is having someone take care of all the negotiation, paperwork, scheduling, etc. The real estate process is complicated from a realtor standpoint, meaning that we are the ones taking care of all of the back and forth negotiations with the seller. There's a bunch of things that need to be scheduled. So like the appraisals, the home inspections, title search, all that other stuff. We're the ones that are handling all that in the background so that you as a buyer don't have to worry about any of that. Instant access to listings the second that they hit the market. Now with this, I'm talking specifically about the MLS. I'm not going to go too much into it right now, but I will a little bit later on down in the slides. So we'll circle back to what I actually mean by that. Having a personal advisor to help you make the best decisions for you and your family. This one's big. I mean, real estate, again, is a complicated process. And most first-time home buyers don't know, as far as, walking into a home and figuring out, okay, if something needs to be repaired, how much is that repair? How much do I offer? Things like that. And those are things that your realtor can sit down with you and help you walk through so that you guys are making the best decision for you and your family. And then the biggest thing that a lot of people don't realize for a buyer, buyers don't pay anything at all for the real estate agent. Real estate agents, both the listing agent and the buyer's agent, are both paid for by the seller. So there is absolutely no benefit to you whatsoever as a buyer to not have a realtor. Some mistakes that people make in regards to realtors. Talking to a realtor as early in the process as possible can get you started on your search months ahead of time. Realtors don't just sell houses. We are also advisors that can help guide you even if you are still a year away from actually buying. So the biggest point that I like to make with this is that most people think that they shouldn't engage with a realtor unless they're actually ready to start looking for a home right now. And that is completely not true. So I've helped countless people that have, needed credit work and things like that, to where, I linked them up with a lender, took a look at their credit report, put them on some kind of plan to get to where they need to be, and definitely have sped up their search, months ahead of time versus, them randomly paying things off and hoping that their credit score goes up. So highly encourage anyone who's looking to buy a house, whether it's right now, whether it's next year, talk to a realtor so that we can help you put together that plan to get you to where you need to be. So next is the pre-approval process. So we'll go over kind of what that process is. You start your application online, talk to a loan officer. They'll help you structure your loan, align it with your goals. The pre-approval process will usually be done within 24 hours or less, but could take a little bit longer. Really just depends on how long it takes you to get the lender your information that they ask you for. And we'll talk a little bit about that. Pre-approval myths, just a few of these. My credit score will go down if I apply. That is false. Your credit score will not be affected by you applying for pre-approval. The biggest thing with this is because when you do a pre-approval application, you're not actually applying for anything yet. You're not applying for the loan itself right now. All it is you're giving the lender your information so that they can take a look at what you have going on, your credit report, credit score, and based on that, give you a pre-approval amount on how much you could possibly afford. Credit Karma said my credit score was too low. Also false. A lot of people don't know that you have a lot of different credit scores out there, and your credit score is going to be different depending on what it is you're actually applying for. So if I go apply for a credit card or a car loan or a mortgage, all three of those credit scores are going to be completely different because they're all looking at different things. So the only way for you to know what your actual credit score is to actually apply for whatever it is you're applying for. I know my score is too bad, so I shouldn't apply. That is also false. And that kind of goes back to what I was just talking about a little bit ago, a couple slides ago. If your credit score is bad, that gives you all the more reason why you should apply for the pre-approval, because now the benefit to you is that you have an actual lender, the one that would be approving you for the loan in the first place, taking a look at your credit score, your credit report, and they're going to be able to tell you exactly what you need to do, what you need to pay off, and how long it's going to take you to do that. So that gives you so much more of a roadmap. Like I said, instead of just randomly paying things off and hoping that your credit score goes up. So highly encourage people that do need credit work to also apply to get pre-approved. So during the pre-approval process, things that you will normally need, your most recent 30 days of pay stubs, your last 2 years job history, so W-2s, tax returns, if you are self-employed, so 1099s, anything like that to show any assets that you may have, most recent bank statements, and then any documentation of assets. So if you have like your 401k account or anything like that. Basically, what they use this information for is to determine your financial stability, your credit worthiness, your ability to repay the loan, and your total debt to income ratio. So debt to income ratio, this is probably the biggest one that will tell the lender how much you can afford or how much of a loan you can afford. And basically debt to income ratio is your monthly debts divided by your monthly income. Now, when I say debts, I'm talking specifically about any loans you may have. So like student loans, personal loans, car loans, credit cards. When I say debts, I don't mean your phone bill, your electric bill, your water bill. Those are not debts. So we're specifically talking about, again, credit cards, loans, stuff like that. Typically, lenders like to see less than a 50% debt to income ratio. So, and this includes your monthly mortgage payment. And then your credit score, typically lenders like to see your credit utilization is under 30%. So there's an example here. If your credit limit is $3,000, you don't want to spend more than $900 a month. And then here's just a little credit score breakdown of what actually encompasses your credit score. So as you can see, the biggest chunks of your credit score is the amount of debt you have, so the amount owed, which is 30% of your entire credit score. And then obviously your payment history, so making your payments on time, which accounts for 35% of your credit score. Your credit history, so how long you've had each account open, only accounts for 15% of your credit score. The types of credit you have accounts for 10%. So types of credit, they call it your credit mix. So if you have a variety of like personal loans, student loans, credit cards, stuff like that. And then new credit, so how many credit requests have you made and how many reports have been pulled on you, only accounts for 10%. So that kind of goes back to that credit score or the pre-approval myth, where people think if they apply for pre-approval that they're gonna, their score is gonna drop. That only accounts for 10% of your credit score. And realistically, the only time where it actually, you'll see a difference in your credit score is, let's say you applied for 4 different credit cards within the span of 2 weeks. That's when it'll hurt your credit score. But if you're applying for a pre-approval or something like that, it's not even gonna make a dent. What you guys need to worry about is the amount owed and the payment history, because that accounts for the biggest chunk of your credit score. So once you fill out that pre-approval application and you get pre-approved, you will sit down with your lender and they will go over your loan options. So This is just a general overview of the main kinds of loans out there. These are not all of the different kinds of loans. There's so many that you can use, but again, these are just the main ones. Starting with the conventional loan, this one has the highest qualifications that you need to qualify for it. Usually, minimum credit score is around 620. Some lenders may require a little bit higher. It really depends on the lender, but universally, it's normally a minimum of 620. And then your down payment can be anywhere from 3 to 5%, depending on credit score. FHA loan is the next one. It's probably the most popular one. A lot of people get an FHA loan confused with a first-time home buyer loan. An FHA loan is not a first-time home buyer loan. Anyone can use an FHA loan. So that is a common misconception about that. With an FHA loan, the minimum down payment is 580. So you can have a 580 credit score and still qualify for an FHA loan. And with an FHA loan, minimum down payment is 3.5%. And then you have the VA loan for any veterans out there, anybody who's done any kind of service in the military. This is probably one of the best loans out there. If you have served in the military, you do probably want to use a VA loan. Again, just like an FHA loan, minimum credit score is 580. And the biggest benefit of the VA loan is that it's a 0% down payment. So you don't have to put anything down. Also, another benefit that's not on here with the VA loan is that you don't pay private mortgage insurance, even if you don't put 20% down. So with an FHA loan and the conventional loan, anytime you put less than 20% down, you have to pay what's called private mortgage insurance, which is added onto your mortgage. But with a VA loan, there is no PMI. So that's another benefit. And then down payment assistance. Now, there are so many different kinds of down payment assistance programs out there. The main one is probably going to be the Minnesota Housing Down Payment Assistance, which I'm going to talk about in the next slide. But most places with down payment assistance, minimum credit score is usually around 650 or so. So if you're planning on using that, you typically want to have down payment of 650 or down payment credit score of 650 or higher. So this is the down payment assistance program for the Minnesota Housing. This is probably the most widely used, and there are actually two different kinds of programs that they offer. So the first one is the monthly payment loan, which is you can take out up to $17,000 to help pay for a down payment and closing costs. This is a loan that's paid back over a 10-year period, and it's an additional, it's basically like a second mortgage. So in this case, if you were to take out the whole $17,000, your monthly payment would be around $170 a month for the next 10 years. If you were to ever refinance the home or sell the home, then you would obviously have to pay whatever amount due that you still had back. And then they also have the deferred payment loan, which is you can borrow up to $10,000 for a down payment and closing costs. And the difference between this one and the monthly payment loan is that with this one, you don't have a monthly payment. You just have that $10,000. And again, if you were to ever refinance the home or sell the home, you would have to pay that $10,000 back. There's also, and I don't think I have it in the slide, but for those of you that were wondering, there is also a down payment assistance program offered by a lender that I use. They are called Refined Lending, and it's called the WISH program. Now, I wish I had, no pun intended. You know what? I'll put a break in the video, and yeah, I'll put that in there. But anyway, with the WISH program, you can get up to $22,000 to use for down payment assistance and closing costs. So how it works is that Refined Lending will match whatever your contribution is 4 to 1 up to $22,000. So for instance, if I come in and I bring $1,000 for my down payment, Refined Lending will give you another $4,000. In order to maximize it and get the entire $22,000, you would need to bring $5,500 of your own money. Refined lending will give you another $22,000. And the benefit to this program versus the Minnesota Housing Program is that as long as you stay in the home for at least 5 years, you do not have to pay that $22,000 back. That is a great program. I've had a few buyers use it, got a couple buyers now that are going to be using it this year. So they do offer it. It starts around May or April. And then they only offer it until funds run out. So I think last year, 2021, they ran out of funds in around October. So if you are wanting to use that or wanting to get more information on that, I can give you the information to apply. And like I said, it's a really, 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 really good program. And I just rambled, sorry. VA loans. So we talked about these. To be eligible for a VA loan, you or your spouse must meet the basic service requirements set by the Department of Veteran Affairs and have a valid certificate of eligibility and satisfy the lender's credit and income requirements. So if you have served 90 consecutive days of active service during wartime, served 181 days of active service during peacetime, 6 years of service in the National Guards or Reserve, or you or your spouse of a you are the spouse of a service member who has died in the line of duty or as a result of service-related disability. So if any of those criteria you meet, then you are eligible for a VA loan, 0% down, no PMI. All right, enough of the boring stuff. That's the pre-approval process. Now let's get started looking for a home. So once you're all pre-approved, that's when I step back in and we will get you set up on an MLS search if you haven't already. And I'll talk about what an MLS search is in the next slide. We'll search for homes. Now I tell all of my buyers, this is a tough market out there. So this can be 2 homes or 200 homes. But the biggest thing is just be patient. Perfect home is waiting for you. Don't get frustrated. All right, so just a little fun fact. Most home buyers, most people that are looking for homes, they use sites like Zillow or Realtor.com, things like that to check for homes. But what you really want is to get set up on an MLS search, which you can only get from a realtor. MLS stands for Multiple Listing Service, and it's a platform that all realtors are required to use when listing homes on the market. Anytime there's an update on the home, it must be entered into the MLS so that you will always have the most accurate information. Sites like Zillow, Realtor.com, Homes.com, and all other websites get fed info from the MLS. So because Zillow gets fed info from the MLS, sometimes it can take up to 48 hours to update. Now, you can see why this is an issue because with this market, homes are hitting the market and some of them are selling the same day. So if a home hits the market and Zillow's not getting that information for another 2 days, if you're using Zillow to search for homes, by the time you see it, it may be gone already. Homes on Zillow may often show that they're available, even though an offer has been already accepted on it, putting you behind the competition. So I get this a lot. People will send me Zillow homes and say, can we look at it because Zillow is showing it as active? I pull it up on the MLS and there's actually already an offer on it and it's pending already. So again, you really want to get your realtor to set you up on an MLS search so that you always have that accurate information that you're not behind the competition. So you guys won't see this. This is basically the MLS when I'm setting you up on an MLS search. And this is basically all the criteria that we can enter in. So you can see there's so many different criteria in here. We can get really granular. So we can do number of bedrooms you want, garage stalls, the year built, type in all the different cities that you're looking in, price range, all of that. Basically what it is you guys tell me what it is you're looking for. I enter in that information here. And anytime a home hits the market that fits your criteria, it sends you an email automatically so that you always have that accurate information. So when you open up the email on your side, you'll see this is what it looks like for you. So you got the map view over there, so you can see it from a map perspective. And then on the right, you can see the actual house. You can click on it, get all the information. Another big thing too is if you guys see those hearts there on the map, if there's something that you're interested in, something that you want to take a look at, you can mark it with a heart. And the biggest thing with that is when you do those, I can actually see those as well on my side. So it really gives me a good, accurate depiction of what it is you're looking for, what areas you're interested in, and it helps us communicate better. So that's a good benefit to this. And then also on the top left, you can see my information up there. This is also another option. So I have a mobile app that you can download. This makes it a lot easier for you guys to do your own search. So as you can see, like it's with the MLS, in the middle screen here, you got the map view, just like the other one. On the right, you can do your own filters. You can look for single families, you can look for townhouses, multifamily, adjust the price as you want. And then on the left, when you actually click on the home, that's the information that you'll see. Good thing with this one too is if you scroll down on that page, you'll also see my information and you can text me right from the app. So this is another way for us to communicate. You can send me home straight from this if you want to go take a look at them. But this one gives you a little bit more freedom versus the MLS search, where it'll only send you emails of homes based on the criteria that I entered in. Whereas with this mobile app, you can look anywhere you want to. So like I said, it gives you a little bit more freedom. So let's say you find the home that you want to put an offer in on. Your real estate agent will write up all the terms and conditions for your offer and submit it to the seller's agent. This could go back and forth depending on how many other offers there are. Now I can tell you in this market, if there's multiple offers, it pretty much probably isn't going to go back and forth. They're probably going to have you just put your highest and best offer in. So it's kind of like a one-shot thing. Once the offer is signed by the seller and delivered back to you, you'll be under contract. So what makes a strong offer? The kind of loan that you have can make a difference. So an FHA versus conventional. Now, not saying that one loan is better than the other one, but it can be perceived sometimes that a conventional loan is better than an FHA loan, specifically because of the higher qualifications to qualify for a conventional loan. So people assume that just because you need a higher credit score for a conventional loan, typically you need a little bit more money in reserves, that there's a greater likelihood of a conventional loan going through versus an FHA loan, which again, not necessarily true, but perception. How much earnest money you put down, and I'll talk about what earnest money is in the next slide. And then if you have any contingencies like having to sell another home, quicker closing, things like that. So basically the moral of this story is offering more money doesn't necessarily make your offer stronger. It really just depends on the situation and what the seller is actually looking for. I've seen people accept offers that were less money, but all of the other terms and conditions were, better than the other offers. So these are all things that your realtor, AKA me, would help you determine to, make your offer the most competitive. So congrats, your offer was accepted, but now what? So these are the steps after your offer is accepted that we go through, and I'll go through each of these steps in detail. We have send earnest money, the inspection and the appraisal, applying for your loan officially, underwriting and title search, and then clear to close. So the earnest money deposit. Basically what earnest money is a good faith payment that a buyer puts down to show the seller that they're serious about the purchase. It is usually held in the listing broker's trust account and is credited towards the buyer's down payment at closing. So the earnest money is not an additional payment on top of your down payment. It's basically you put that money down, it's usually 1% of the purchase price. The listing broker will hold that until closing, And then once closing happens, that earnest money that you put down gets credited towards your down payment. So for instance, with the 1% purchase price, home is 200,000, that would be $2,000 earnest money. Going back to what makes a strong offer, putting more earnest money down can also make your offer stronger. You know, typically, again, earnest money is 1%, but let's say you put 3% earnest money down. Shows the seller that you're really serious and that you're committed to making this deal go through. So those are little things like that to make your offer more appealing. Oh, and one other thing that I don't have on here is that the earnest money needs to be deposited within 3 days of your offer being accepted. So this is the very first thing that happens once your offer is accepted. Then we go through the inspection and the appraisal. So typically you will order the home inspection within 7 days of the accepted offer. And the home inspection basically is to ensure that all the major aspects of the home are in working order. With the appraisal, an appraisal will compare the homes to similar homes that have sold in the area just to ensure that it's actually worth the price that you're paying for it. So nobody wants to overprice for a home or overpay for a home. That's what the appraisal is for. The fee for the appraisal will typically be around $500 to $600, and the average home inspection is around $400. But with the home inspection, it really just depends on how old the house is, how big the house is. So the bigger the home, the more expensive the home inspection will be. But again, on average, you can expect to pay around $400 or so. And then also with the inspection, you can add other things like mold inspections, radon inspections, things like that. So those are all add-on costs. Really just depends on what you add on there. So as a buyer, the inspection contingency is probably your most powerful tool, because when you get an accepted offer, you haven't really looked at the house, like really looked into it yet. So you don't know if things are working. You don't know if there's something hidden that you didn't see during the showing that needs to be fixed. And you really don't want to buy a home that looked good on the outside, but then when you do some further digging, there's a bunch of problems in there and now it's yours. So the inspection contingency is your most powerful tool. If at any point, if there's any issues that are found on the home inspection, buyers have one of three options. One, you can have the seller fix the issue. Two, you can renegotiate the purchase price to account for those repairs needed. Or three, you can walk away from the deal completely and get your earnest money back. What I usually like to go through with my buyers is that you don't want to use the home inspection period as kind of like a negotiation weapon. So you don't want to go in there, you know, asking for little things like, oh, you know, the light bulb needs to be replaced. I want the seller to replace it. Like, you really only want to focus on the major aspects of the house. So I typically tell buyers like plumbing, electrical, and the heating and cooling. So like your furnace and AC, roof, siding, big things like that. Those are the only things that you want to focus on. Little knick-knack, ticky-tack stuff, you want to leave that be. You can take care of that. But again, don't want to use the inspection period as a negotiating tool to get a lower price. And then the same thing with the appraisal also. So if the appraisal comes back low, depending on what kind of loan you use. So with an FHA loan, it has to appraise at the price that you're at the price that you're offering. So with an FHA loan, if the appraisal comes back low, you can go back to the seller, renegotiate the price to that appraisal price, or you can walk away from the deal completely and again, get your earnest money back. So typically, once the home inspection comes back, everything is good, you're done negotiating. This is when I give your lender the go ahead to get everything else started. So this is when you're actually apply for the loan itself. So this is the same as the pre-approval process. Typically, your lender will ask you to submit your W-2s, bank statement, pay stubs, most recent pay stubs, things like that. Your loan officer will officially apply for your loan. and the info will be submitted to underwriting for approval before a clear to close will be issued. All right, so this is very important. What not to do during this period. So once you apply for that loan, you want to avoid having anyone check or obtain your credit report, including yourself. Don't open any new credit cards. Don't move any money between bank accounts without notifying your mortgage lender. Don't close any credit card accounts. Basically, what this is saying is do not do anything money-wise, finance-wise, that is out of the ordinary of what you normally do. So paying your rent, that's fine. Paying your normal bills, that's fine. But you don't want to go on a vacation all of a sudden. You don't want to start buying furniture and spending thousands of dollars. You don't want to move big lump sums or deposit big lump sums of money that are out of the ordinary for you. If you do those things, you could potentially make yourself not qualify for the loan anymore. So it's really important that you wait until after you close to do those things. When in doubt, ask your lender first, and they will properly guide you to what you should do. Another thing that happens during this period is the title search. So this is where a title company will search the home records to verify that the seller is actually the authorized seller. They will also make sure that there are no liens or any property taxes, property or outstanding tax obligations. Basically, the title search is like a background check for the house. They want to make sure that everything's good, everything's clean, and that you're not going to walk into any crazy financial situations or anything like that. So this is to help you make sure that once you close on the house, you're not going to have to worry about any old stuff coming up. Kind of like an old ex-girlfriend that pops up out of nowhere. I've never had that happen, but that joke. All right. So once all that stuff's done, everything's good, documentation's been received, you got the clear to close. Basically, this just means everything's ready to go and you guys are clear to close, just like it says. At least 3 days prior to the scheduled closing date, your lender will be giving you a closing disclosure, which outlines each and every charge associated with closing your loan. If you guys want to know more about closing costs and what entails closing costs, you can go to my YouTube video on what are closing costs, and I explain all that stuff. Final walkthrough. So usually this will be the day of closing or the day before to ensure that the home is in the same condition as it was when you last saw it. So, you know, when you first looked at the home, the seller might have still been living there and all that. So before you close, you want to go back to the house and make sure that the seller's out, that he didn't gouge any walls out or anything like that while they're moving the couch. If there were any home inspection repairs that you guys negotiated, you want to make sure that those have been completed. You want to make sure you do all of that before you close, because once you close on the home, anything that the seller may have left behind is now your property / responsibility. So you want to make sure that they cleaned up and did all that other stuff. They didn't leave anything in the closet or whatever, because again, once you close, it's yours. So closing day, you're now at the final step of the home buying process. At closing, you'll be signing a ton of documents to officially transfer ownership to you and finalize your loan. It'll be you, the closing agent, and your real estate agent. The lender and sometimes the seller will be there. More so before COVID, you know, the lender and stuff like that will be there, but typically it'll just be me, you, and the closing agent. Once everything is signed, you'll get the keys to your brand new home. Congrats, now you're a homeowner. And going back to what not to do during that closing phase, so not, you know, applying for credit cards and all that. Once you close on your home, now you can go buy the furniture, now you can do all that other stuff. If you're like me, literally seconds after closing on my home, I went straight to Home Depot and got a Home Depot credit card. So that's the time to do all that stuff now. So just some frequently asked questions. The pre-approval process can take anywhere from 24 to 48 hours. Again, that really depends on how long it takes you to get
all that information to your lender. So it's best to have that information already ready if you know you're about to get pre-approved. And then also, if you do it on like a Friday, you probably won't get it back until Monday. The entire home buying process itself, so from start to finish, from pre-approval application to closing, can take as little as a month and a half, but will usually be around 2+, depending on how wide your search criteria is. So the quickest closing that I've ever had, I had a friend reach out to me last week of January, got him pre-approved, all that, found him a house within a week, and we closed 30 days later. So about a month and a half is the quickest I've ever had. The time from getting your offer accepted to closing on your home will be around 30 to 45 days. So again, that's that offer accepted. Then you have the inspection, appraisal, title search, applying for your loan, and closing. That whole window takes 30 to 45 days. Your total upfront costs to buy a home include the home inspection, the home appraisal, down payment / earnest money, and then your closing costs. And then the last one, closing costs will vary, but a good rule of thumb is to plan around 3% of the purchase price for closing costs. Again, to learn more about closing costs, go to my YouTube channel and watch the video on closing costs. There are some ways to get around that as well. And again, I talk about those in the video. And here are my, I don't know why that awkward pause just now, my brain just went blank. Social media handles. So if you guys want to check me out on any of these platforms, Facebook, Instagram, or YouTube, obviously you guys are on YouTube right now. You can reach me here. But again, thank you guys for coming. Thank you guys for watching. And here is my information if you need it. Look at that beautiful face. Oh my God.
And that is it for today's video. I'm really hoping that you guys got a lot of information out of this. If you did, just a reminder, please hit the like button so that I know that this content was useful to you and I can continue making more content just like this. Also, again, if you guys have any questions or if you want to download that simple buyer guide, just go into the video description and hit that link to go ahead and download your copy. Again, if you have any questions, make sure to put those in the comment box or you can reach out to me directly. But again, thank you guys for watching the video and I'll see you guys in the next one.